Eric, do you know what I love to have for breakfast?
A big old bowl of J.O.'s. I just imagine you have a box of cereal with your face on it.
I was going to say reviews on Apple Podcasts. They give me more sustenance than anything else in my life. They bring me energy. They get me ready for the day ahead. And you know, Eric, it's been a minute since I had a good bowl of reviews on Apple Podcasts.
Sometimes I read my reviews right before I go to bed, just so I can dream good dreams at night.
If you want to help me start the day right and help my self-esteem while also helping us in the eyes of Apple, please leave a review for Upside on Apple Podcasts. If you have an iPhone, even if you don't use Apple Podcasts, we would love for you to submit a review about why you love Upside. And if you don't have an iPhone, if you're an Android user, that's okay too.
We really understand what these early signals of success are. So it's really about how do you create a brand that is identity driven, that creates a sense of belonging, that inspires you to participate in the community. And that's why, we really believe that education and community are the new acquisition.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside. Hello, and welcome back to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Cool Middle Name himself, Eric Knight Hornung.
I have a lame first name and a hard to pronounce for most people last name, but my middle name is pretty sick. I like it.
What's the origin story here? Where does Knight come from?
It was my grandpa's middle name, too. I think it got passed down through a couple generations. So I assume that either someone lied about being a knight in my family's lineage or was actually knighted at some point. I don't know.
I feel like, you have this handle of E.K. Hornung. I feel like you're optimizing the wrong part of the name. I feel like E. Knight H or just E. Knight would be even better.
I've long told myself if I write a book ever, I will go by E. Knight on the book. So this is the second iteration of Eric on online life. Everything was Eric.Hornung, then it was Eric.Knight.Hornung. Then the next one will be Eric.Knight. And then online and everywhere, I'll just be Eric Knight because I think, Jay, I have a large bet. And actually, someone asked me about this the other day, that online privacy is going to become a luxury good in the next 2 decades. And that's why my picture doesn't exist anywhere online. It's all that cartoonized version because and my name, I want that to be off too. So it's a transition. It's not going to happen immediately, but I believe that privacy is going to be a huge luxury good into the future. And only the richest people are going to be able to afford it or the ones who are thinking ahead of time.
How do you marry this luxury good of online privacy with the growth of people wanting to be independent creators and make a living from their self?
Mark Twain's name wasn't Mark Twain. There's nothing that says you can't be an independent creator or a creator in general with a different name than who you actually are.
So do you think we're going to see more and more pseudonyms?
Yes, I do.
All right, you heard it here first.
Do you know Beeple's name?
Yes, Michael Hartman.
Well, you're pretty dialed in. I'm guessing most people don't. Yeah, I think we will see more and more of that, splitting your online self from your in-person self.
Well, speaking of names, today we are speaking with Jessica Peltz-Zatulove, a founding partner of Haannah Grey, a first-check venture firm investing in visionary founders, reimagining everyday experiences to improve work and life. And Eric, a little preview of the interview here. I believe Haannah Grey is a mishmash of names from Jessica and her co-founder, Kate Beardsley, who's been on the show, their daughter's names. So that's how I try to tie this together, but sometimes the segues work well, sometimes they don't.
Hey, you named it how you saw it, and it worked out. The listeners get it. You tried. You can't always succeed in this one life you have, Jay.
You got to take your shots, and those shots are what help you live the one life you have to live the best way you can. And if you want to live your one life the best way that you can, visit our friends Ethos Wealth Management by going to upside.fm/ethos.
You know what's exciting about this interview, Jay?
What's exciting?
Even though Kate wasn't with Haannah Grey at the time that we interviewed her, this will be the first time that we interview every single partner at a venture firm.
Very fun. Very cool. And we've actually been in touch with Jessica for many, many months. We've been pleading, Jessica, please come on Upside for many months. And we've just had some reschedulings and the timing wasn't great. And it got to the point where we wanted to talk about Haannah Grey and it just wasn't yet time to talk about Haannah Grey. But Eric, the time has come. Jessica, who has referred half a dozen guests to the show, will be here talking about Haannah Grey and also talking about Global Women in VC, which she co-founded, the largest and most active community for women investors, empowering women VCs around the world to better find each other, to connect, collaborate, and create a sense of community.
If you want to talk about Haannah Grey or women in VC or anything that comes out of this episode, you can reach out to us at Upside FM on Twitter, or if you have something a little longer, you can reach out to us at hello@upside.fm, and we will get to that interview right after this. I hate that we've demonized scheduling links, Jay.
Scheduling links are actually one of my favorite things. I love the ease of someone saying, here's when you can book a time with me, and then I can choose when it's best for me too.
Whenever I get an outreach and someone says, what time looks good for you? I ask them, hey, do you have a scheduling tool? And you know what scheduling tool I wish they had?
Which one is that?
It's a new scheduling tool called SavvyCal. SavvyCal makes it easy for both parties to find the best time to meet.
SavvyCal makes the scheduling process even more savvy than any other scheduling tool that I've seen, and I mean that. It makes it so easy to personalize your link. You can say, hey, this is a meeting time for Jay and Eric, and it just looks so professional, so sophisticated.
So much so that we're going to be using it for Upside going forward, and maybe even rolling it out to the Upside network.
You can use SavvyCal as well. You can sign up for a free account at savvycal.com/upside. That's SavvyCal.com/upside. And when you're ready to upgrade to a paid plan, you can use the promo code UPSIDE for a free month.
Jessica, we like to start on Upside with a background of the guest. So you can tell us about the history of Jessica?
Yeah, absolutely. So I actually grew up in Minnesota, which I feel like is pretty relevant for this conversation. And actually really only comes out when I say I'm from Minnesota, is when my accent seems to kick in.
I heard it.
Yeah, every now and then will sneak in there too. But so grew up in Minnesota, went to school at Indiana University, and then moved to New York after school. So this was around 2003. It was about a year and change after 9/11. So still very different city, I would say. But I started my career on the customer side. So I spent over 10 years at a global advertising agency. I was running the media strategy for brands like H&M, Gucci, Puma, 20th Century Fox, Verizon, Georgia Pacific. Was very fortunate that I was running Verizon's media strategy from 2009 to 2012, which just changed the trajectory of my career because I really had a front row seat in terms of how consumer behavior was shifting more towards mobile adoption. The App Store was exploding. The New York tech ecosystem was really starting to blossom. So I started working with startups on the side and just fell in love with the space. I actually launched the Android device for Verizon. I did the industry's first ever iPad sponsorships with Sports Illustrated and People magazine. And so when I started working with these entrepreneurs in New York back in, I guess this was around 2010, 2011, I very quickly realized as a non-technical female that my background as a marketer was really helpful to these founders that were more product or engineering guys and just didn't know how to commercialize their business. So they didn't know how to get their first customers, how to do brand building, how to do community building or content strategy or community building. And so that really became my superpower in the startup community. And so around that point, I started to bring these startup founders I was working with to my brand clients at the media agency and identified that there was really this gap that was happening, this disconnect of big brands wanting to connect with startups, but they were just not speaking the same language. They had no idea how to collaborate, how to work together. So realizing that there's this deficiency, I ultimately decided to leave corporate in 2012 to go to a startup myself. I wanted to get my hands dirty, get some operating experience. So I joined one of the first innovation boutiques called Evolution as their second employee. And that's what we did. We specialized in helping startups get their first customers. So connecting big brands with emerging technology. So I was working with brands like Kraft Foods and Mondelez and Unilever, ended up doing some of the industry's first ever influencer campaigns and marketing campaigns around connected devices. So really being on the cutting edge of what are marketing applications for emerging technology, help them scale that business to a few million in revenue, and then ultimately transition to corporate venture capital in 2014. So for 6 years, I was running the corporate venture practice of MDC Partners, which is a publicly traded holding company for advertising agencies, investing in early stage companies that meet the needs of what we were calling the modern CMO. So what are different technology solutions that are changing the way that brands can interact with their customers? So we did a lot of investments around content and data and SaaS and audio. Again, really loyalty, anything that really changed that relationship between customers and big brands. And then ultimately last year left to start Haannah Grey with Kate Shillow-Beardsley, who is hands down the best kept secret in venture. Obviously, you guys know Kate well too.
Friend of the podcast.
Friend of the podcast. And we launched officially Haannah Grey, which is now our own early stage firm, first check fund, investing in founders reimagining everyday experiences to improve work and life. Also along that journey, I can kind of pause if we want to pause there because there's a lot to unpack. But then also in 2015, co-founded Women in VC, which obviously is very on thesis as a friend of what you guys are doing here at Upside too.
We'll get into Women in VC and Haannah Grey in a minute here. I want to jump back to something you said earlier, which is that these large brands and these small companies weren't speaking the same language. Can you dive into that a little bit more about kind of where the greatest propensity for something to get lost in translation is?
Yeah, absolutely. So one of the biggest disconnects that I saw on the founder side is they didn't always understand the workflow of what the brands needed, what their customers needed. So not just in terms of their business model and how they work, but in terms of how do you get through procurement? Who would be your stakeholder at the company? Are you selling this to the CMO? Is this an e-commerce solution? Is this a data solution? And then how do you package your company and tell the story in a way that fits into their media plan, into their marketing plan to really help them execute? And that's something that, again, it's just these brands and a lot of these CMOs, they're used to seeing things presented in a certain way. They're used to a business model being presented a certain way. Back in the early days, they're like, what is SaaS? What does this mean? Like, I need a campaign that goes against my back to school campaign or for my fall fashion campaign. You know, there's a bit of a learning curve there in terms of how you scale something across the full calendar year and really have it be integrated into your full marketing plan. And at the same time, these startups, they didn't necessarily know the nuances of how their customer worked and got contracts approved. So that was really a lot of the work, is sometimes I would be working with these founders that could be sitting on a brilliant transformative business, but just not really, like, something was missing in terms of how they communicate that to the customer in a way that makes sense with their ways of working. So really understanding how to bridge those two worlds to help startups find their first customers and commercialize their business is just something that, you know, I've really been focusing on for the past 10 plus years.
You mentioned early on, like, identifying the right people at the large organization.
Yeah.
We have so many founders on who talk about kind of these large logos that they want to bring on as customers. They're like, yeah, we're talking to them in this pipeline. And so often it's like, who's the right champion within an organization? So how do you think about identifying a champion in a large organization? Is it title based? Is it influence based? Like, is the CEO always the right champion? How should a founder think about finding that first customer and specifically that champion within the first customer?
Yeah, it's a great question. And the answer is, it totally depends. I'll share one quick anecdote about what I was saying before about just sort of that disconnect. Because I was remember back in 2011, 2012, I was working with this brilliant founding team called Triple Lift. And they called me and they said, Jess, hi. So we just got an RFP from Victoria's Secret and I don't know what that is. So I just said we don't do it. And I was like, yes, you do RFPs.
No.
This is how you do it. And so I remember, I went over to their office after work. We like whiteboarded out this whole thing. And I remember just talking to him and being like, okay, so at the 25K level, you can do this. At the 50K level, you can do this. At 100K, and then you can charge more here and less here. And I just remember seeing the wheels turning in his head of saying, like, I can do that. I can charge for that. I can do. I'm like, he's like, but I only pay this for. I'm like, yeah, this is what you do. And it was just this light bulb moment. And now Triple Lift is one of New York's premier ad tech companies. They have hundreds of employees around the world. And so that was really their first customer that they won. And so it's just an example of like, there's different language and different nuances of ways of doing business. Obviously an RFP is just one example, but there's a lot of these different examples. So in terms of your question about how do you find the right stakeholder, it's less about a title and more about who can you get to become emotionally invested in you and your value proposition and how it can transform their business. And that's something where like, I don't think it's necessarily the CEO, because guess what? The CEO is not going to be the one doing the work, especially at these big brand logos. They're going to send an email to someone who's going to send an email to someone who's going to send an email to someone, and it's just going to get lost. So at this earlier stage, and when it is something, I remember when we were doing some of the first campaigns around mobile wallet or some of the first campaigns around influencers, it's less about this is a CMO, this is a brand director, and it's really about what champion can you find internally that just really believes in how your business can be transformative for their results. And I think that's something that startup founders always need to just keep in the back of their head, which this is going to sound really frustrating, but it's kind of just an inconvenient truth, is nobody gets fired for buying Facebook ads. Nobody gets fired for buying ads on YouTube. So there's often not an incentive to experiment. And it's just part of a company culture that you as a founder need to suss out and to understand, like, what are their motivations for testing my business? And what is it going to do for them? What could be the repercussions if this fails? Is this a culture? Does this brand have a culture of failing? And is that going to be okay? Or is it going to be really uncomfortable for them? And there's no right or wrong answer. It's just, I think, having some of those really open conversations with your brand client of saying, what are our KPIs? What does success look like? Because let me tell you, success is not going to be 50,000, 5 million people, like the reach you might be used to. So let's really collaborate on like, what do we want to learn out of this experiment? What are the 3 KPIs we want to learn? And if we prove this right, is that going to be valuable to you? How do you see this improving your business? And so I think framing the conversation that way will just, number one, get them talking and get them more vested in the success, as opposed to you selling whatever phenomenal content or data play that you have. Really take the time to listen to what do they need to accomplish to meet their business goals, and then see how you can really position yourself as a solution to meet the needs of their organization. It's one of the biggest, I'd say, like Jedi mind tricks of working with marketers is there's not always that culture that embraces failure. We used to say when I was at that innovation consultancy that if this pilot fails, that's just as successful as doing something that succeeds, because then we're learning what not to do, which again, it will help us just iterate and learn for the next time what we should do. But it's having really that open dialogue of just really understanding the culture and getting them excited about how it can add value to their business or their customers that creates that connection that will help them shepherd you through their process. Because you're going to have to go through procurement. That's a huge pain in the ass. Not that I don't love a lot of procurement people, but it's like, it can be a challenge. Do you have to present? Like, just understand what is that process to get to yes, and then who would be my stakeholders from there is really a more streamlined, efficient way to work with brand partnerships.
You talked about this wild opportunity of helping Verizon's media strategy from 2009 to 2012. And then you mentioned around the same time, you're starting to work with startup founders, and your background in marketing was really helpful. How did those things interplay? Why did you start working with startup founders?
I just saw that there was this shift and there was this opening in terms of the way consumer behavior was changing, and that everyday experiences were being reimagined. I live in New York City, which I recognize is a little bit of a bubble, but I remember being like, yeah, I could just like lift up my hand and call a taxi. But there's also this app that now I could just wait in my apartment and the ride will come. And so I think I recognize that, number one, things were growing really quickly. We hated the iPhone at the time because it was locked into AT&T. Verizon couldn't access it. And so then that's when we launched Android with this just horrible Droid Does robotic campaign. And we thought only millennial males were going to buy it. The campaign was actually like, I do or I don't. It was pretty bad, whatever it was. But more so, I started to see, I remember when I first started working at Verizon, it was something like 30% smartphone penetration. And so we started calling it the clamshell phone versus moving into smartphones. And so what really an aha moment was for me is our strategy when I first started on the business was starting to move away from stealing customers between carriers. So originally it was all about getting customers from T-Mobile, from Sprint, from AT&T to move into Verizon. And the KPIs and the objectives was more about getting people to upgrade to their data plans and getting people into these new devices that were way better than like a Palm or some of these other shitty devices. And so recognizing what the power and the adoption had been with iPhone and what the promise was for Android and just all the creativity that was coming out of the app ecosystem, it just kind of started me on this path and this journey around what will the world look like as these technologies continue to evolve. And then I think one of the biggest aha moments, I remember being in a meeting with the publisher of Sports Illustrated, and he's talking, I'm totally dating myself, but he's talking about how you can read the article about the home run at the game last night and then tap the screen to watch the video of this actually happen. And I was like, holy shit, this is just completely going to transform the way we interact with content and the way we interact with brands and media. And of course, he was talking about the launch of the iPad and like their iPad app that they were launching.
So it sounds like you were taking just personal initiative to meet startup founders because you're seeing the promise and you're getting interested. It wasn't something that was happening like at work. You were just like, this is interesting. I want to meet people who are leading this.
Yeah, and ERA was launching around then too, Entrepreneurs Roundtable, which is a phenomenal accelerator here in New York. I had some friends that had gone to work at startups. A good friend of mine was early at OMG Pop. So if you want a real throwback, she was the product manager on Draw Something. If any of you remember that game, which just blew up practically overnight within 6 weeks. And so there was just a lot of this excitement and energy happening in the New York startup ecosystem. I also had started to read some books. I had read Lean Startup. I had read Startup Nation. I actually was in Tel Aviv on vacation, New Year's Eve 2011, I want to say. And I had just read Startup Nation. And so I remember I posted on a bunch of LinkedIn groups like Mobile Monday, Tel Aviv Tech, blah, blah, blah. And I was like, New York media exec coming to Tel Aviv. I just want to meet with cool startups. Like I work on Verizon and H&M and Gucci. Like anybody that wants to just jam with me, I'm going to be at this coffee shop, just like DM me. And I ended up just hanging out in Tel Aviv for an extra week, meeting with entrepreneurs that would just kind of come in and pick my brain about marketing and the market and the brand. And I just kind of recognized that a lot of my perspective that I took for granted in terms of how to work with customers, how to build a brand, how to do content, how to do community building was just, it's something that can be so hugely helpful to businesses, but it was often an afterthought around building product and, finding product market fit, but being really scrappy and creative with customer acquisition. And so from that moment, again, it was around like 2011-ish, I recognized, I was like, why am I buying these shitty homepage takeovers when I can work with these founders that like really are changing the world? And so from that moment, I was just like, no looking back. And I've been working pretty much exclusively with early stage founders ever since in different capacities.
Take me into your experience at corporate venture capital. I feel like in all of the realms of the VC world, the corporate venture capital world has the widest dispersion of experiences. Some people go into it excited about VC and leave saying they'll never work in VC. Everybody has a different corporate VC story specifically. So what was your kind of takeaways from corporate VC that made you say, yes, I want to come out of this and launch my own fund?
I think corporate VC gets a bad rap. I think ever since Fred Wilson called us the devil, it was like a little bit downhill from there, which, we did a lot of reputational repair. No, I'm just kidding. But look, corporate VC is becoming a major player in the space in terms of just being a viable source of capital for founders. I think it's something like 25% of all, maybe give or take, is corporate VC money. This is my take on corporate VC. Everyone is going to have a different process. Everyone is going to have a different motivation, and everyone is going to have their shtick, right? A lot of corporate VCs will say that they're smart money and they're strategic money. And I believe that's true because corporate VCs often are the customers. And so as a founder, I would say I'll reverse engineers to say what I think you as founders should be asking questions of the corporate VC is I think you need to say, number one, why do you have a corporate venture practice? What is it about working with startups that make this an interesting initiative for you and your team to spend your bandwidth on? Are you looking for an acquisition target? Are you looking for commercial opportunities? Are you looking just to learn? Do you look at it as a research and development tool? Like there's a lot of motivations behind why corporate VCs exist and why there's just been an explosion of them over the past 5+ years. Number two, I would ask, what's your process? Are you the decision maker? Do you have an investment committee? How often does that investment committee meet? Where does your money come from? Do you invest off the balance sheet? Do you have a dedicated pool of capital that you earmark? And the reason that's important is because if they're balance sheet investors, then there can just be nuances to that where your corporate venture practice is probably a rounding error compared to their broader market pack. And so depending on what's happening in their category and their competitive set or what their business priorities are, sometimes either number one, I can't tell you how many times if I was closing a deal on March 15th, I was like, can I just wire on April 2nd? Because that would be really helpful for my quarterly reporting. Because again, like you have shareholders to do. So not a bad thing, just something to be mindful of. Or if it's fourth quarter, they might need the capital on their balance sheet to hit their earnings. So again, none of this is a bad thing. It's just the more you can be armed with some of these nuances to ask these questions will just help you better manage expectations. So absolutely ask around process, ask what you should expect. Do you need to talk to business units? Do you need to present to an investment committee? How long do you take? Do you need to do a pilot test? Do you do commercial deals? And then number three, which I think is most important, is what can I expect from you as a partner? Assuming that I take your capital and, we're excited to work with you, what can I expect that post-investment support to look like? How do we get a commercial deal done? And, they're going to say we can't guarantee partners, we can't guarantee revenue, and that's totally fine. But are you going to help me have a roadmap to how to navigate your procurement team? Are you going to introduce me to different key stakeholders across your organization? Can I pick your brain on my product roadmap or on feedback to kick the tires on, does this work? Does this not work? How do you feel about me working with your competitors? Because I'm going to, and you got to deal with that. But let's talk about it so there's not surprises. And so I think that the more you can just set the foundation of a really transparent, open dialogue with corporate VCs, they can be hugely helpful and hugely beneficial. Where I think it can get uncomfortable is if you have people at the corporate VC that are not full-time. So I think that, if they don't intentionally mean to ghost founders, but they're just dealing with other shit they have going on in the organization, that can happen. Or if the corporate VC arm is very detached from the core business, that they might not know who to talk to. And so I think different corporate VCs just have different processes. And so for you as a founder, you might think, this is incredible. I got insert X brand here to invest in me, but what does that mean in terms of value creation for you? And so as rounds just get more and more competitive, Kate and I talk a lot about liquidity management as companies are staying private longer and as funds are staying private longer. There was about $73 billion that went into venture capital last year. That's more than quadruple the amount of capital that went into VC funds in 2010. It's almost double the amount of money that startups raised. It was actually so it was $73 billion that went into VC funds last year, which is again about quadruple how much VC funds had raised since 2010. And I think it's something like about 156 billion that went into startup investments. And so capital is getting competitive. But the point being is that when there is so much money and capital available for founders now, you can be selective. If you have a great business, you can be selective about who you take capital from, because now everybody has a venture fund, right? Corporates have one, celebrities have one, athletes have one, more and more micro VCs out there now. So you as a founder should be really blunt. I think a little chutzpah never hurts to say, what does our post-investment relationship look like? What should I expect from you? And then ask to talk to founders in their portfolio to just validate and back that up. So I'd say that's, I think, probably how I would think about working with corporate VCs in this space. And in terms of why I left and started Haannah Grey, I'm thrilled to collaborate with my past corporate VC. They're phenomenal people. For me, when you're at a strategic, you are connected to the strategic mandate that company needs you to execute on against. And being in one of these moments of disconnect, I was just seeing so much incredible solutions that were happening in fintech and education and wellness that were just very off thesis to what the corporate needed us to focus on. And so it was one of those things where I just couldn't feel like I was sitting on the sidelines. And when I was able to partner with Kate, I was like, there's nobody on this planet I would rather partner with. And so we just have to go for it.
I'm going to resist the temptation to go into Haannah Grey right now
No
because I feel like to color that discussion, we need to learn a little bit more about Global Women in VC. Can you talk to us about why you started Global Women in VC?
So Global Women in VC, I started in 2015 with Sutian Dong. So think about the backdrop for that, right? I had just transitioned to corporate VC in 2014, was really trying to learn and just wrap my head around this new industry that at the time I had only met a few other women, which again, back in 2014, 15 was just kind of how it was. And so when I met Sutian, at the time she was at First Mark Partners. And I remember just saying to her, is there just a group or something for women to connect? And she was like, there's not, but there should be. And I basically said, well, I like planning parties and I selfishly want to know everybody. So we should just start something. And so in February 2015, a little over 6 years ago now, we had our first event in New York City. There was about a dozen of us on a rooftop bar. And we're like, wow, there's about a dozen of us. That's amazing. And then we started a spreadsheet. At the time, it was a spreadsheet. And we just started to have women put their information in, what do you invest in? What stage? What's your check size? Do you lead rounds? And really, I started that because it was scratching my own itch to just put this puzzle piece together. I was like, I need to just better understand, again, who invests in what, at what stage, and what sector, because I recognized that the more I could have a data-driven way to have a blueprint of the venture community, the more successful I could be in terms of just knowing who to share deal flow from and knowing who to collaborate with. Fast forward to 6 years, what started as a dozen of us and a spreadsheet has now become the world's largest community for women investors. We now have over 3,200 women investors across more than almost 2,000 venture funds in over 180 cities and over 60 countries globally. And so what happened is that spreadsheet started to, then a woman from Boston would join, then a woman from LA would join, then a woman from San Francisco would join. And we really just recognized that there was this urgency to connect and collaborate. And again, just put the puzzle pieces together in venture. And so it really has become, for us at Haannah Grey, also just a blueprint for how we think about data-informed communities and really connecting with intentions. And that's something that, we help founders with. It's become something that we're really passionate about as a new acquisition. And so Women in VC is just a phenomenal example of, we were basically COVID ready with this virtual community. And then when we migrated that Google Doc over to Airtable about 2 years ago now, that's really when it was just crystallized this vision of being a really powerful tool to help cut data around the venture community to, number one, be really helpful to founders. Number two, be helpful to us as fund managers as we think about who doesn't make sense to bring into a round or to find follow-on capital with, or to find a lead, or to get smarter about a sector, to get smarter about a particular market. So our Slack group now has over 100,000 messages, over 100 active channels. And there's just dozens and dozens of virtual meetups, educational webinar, there's investment opportunities being shared, there's resources being shared. And so we really recognize that, yes, we need to recruit more women into venture, but we also need to keep the women we have in venture. And that's particularly important for women that are outside of the coasts. So just to give you some context, about 63% of our community is US based, and about a third of them are outside of New York, Boston, and San Francisco. So we're in over 75 US cities, 36 US states. And it's incredible because we'll hear from these women. We actually just got our first woman from Oklahoma City this morning, which I was like, so freaking cool. But it's kind of the point where we constantly will hear from women that they are the only one in their firm. They're one of the only ones in their local community, one of the only ones in the local region. And so this just makes them feel a part of something bigger and really gives them the tools and connections to succeed when tech and VC and entrepreneurship is just becoming increasingly decentralized outside of the coasts. So we're thrilled that, we've been building this for 6 years now, and it really sits at the center of how to create meaningful connections for women in the venture capital community.
How do you and CTN manage to not make this a full-time community management role for the two of you? Because that sounds like an enormous community with a lot going on, plenty of moderation that could be done, I'm sure. How did you put bounds on that to let it thrive, but not slow you guys down?
Yeah, great question. Something we've thought about a lot. So it's actually a pretty well-oiled machine right now. So we go in once a week and we approve all the new submissions. You can sign up on our website, women-vc.com. So we get about 20 to 30 new submissions a week. So we qualify every single one. You have to be full-time at a check writing institution. You have to have a fun email address. So you basically take an hour a week to run through and send an onboarding email, welcome them into the community. And then from there, we recruited over 100 channel moderators. And these are women from literally around the world that, again, we think of women in VC as a canvas, as an open source community and as a canvas. If you want to learn about something, if you want to interview someone, if you want to write about something, if you want to meet more people, like, we are just the central tools and infrastructure to help you do that. We have a couple events that we plan. We'll do like a monthly mingle where it's just like, you just come, we put people in breakout rooms, no big deal. But yeah, it absolutely could become a full-time job. But I'm obviously running Haannah Grey. CTN is running her own respective fund. And so we see this as something just supercharges our firms and is also just a nice thought leadership halo effect around diversity. But ultimately, the community has been able to run itself because we really empowered our members to use our platform as a canvas to connect. So that's really how we think about it.
Your name is Jessica. Your partner's name is Kate. Where does the name Haannah Grey come from?
So Haannah Grey is named after our daughters. We both have, they're 3 years old. They're 6 months apart. My daughter is Rhea Hannah. Her daughter is Gunnison Grey. They're FaceTime buddies. And it's just something that, me coming from the brand world, my partner, Kate, actually started her career as chief of staff for Martha Stewart. So she's kind of always been next to the entrepreneur. After that, she worked with Ken Lear as employee 20 at the Huffington Post and then started Lear Media Ventures, which is now Lear Hippo. So she did 3 funds, 200 investments with them. And wrote early checks into some of the most iconic brands: Venmo, Billy, Warby Parker, Casper, Birchbox, BaubleBar, BarkBox. So we just both have a very deep appreciation for brand building. We also wanted something that was really differentiated as a venture firm in the coming decade. It's wide open from a trademark perspective. And we also just recognize that we're role models, not just to our girls, but to people everywhere, that this is a new normal. You can have a great career and balance a family, and that should be talked about. And it also, we've found, really helped us connect with entrepreneurs because venture is a very human business. We are working with these people for 4, 6, 8, 10 years. And, we've had founders get divorced. We've had founders have babies. We've had founders have parents pass away. And so there is this human connection that you want to understand and have relationships with them in every part, because it can impact their focus around building a business, and you want to be that trusted partner. And so we wanted to do something that was personal and meaningful to us. That sounds way better than Zatulove Beardsley Ventures. That just does not roll off the tongue. But then it's also just, it's not a power word. It's not a street name. It's not a tree. And so Haannah Grey, there's been a little bit of this, like, we get called Hannah a lot, which is weird. There's an assumption we only invest in female founders. We do not. We invest in all founders, regardless of gender or ethnicity. But we're here to create generational wealth, which is something that I think resonates with a lot of entrepreneurs and a lot of our investors too. So there's a lot of different dimensions and layers that have gone into the brand that we're creating with Haannah Grey.
We've had Kate on the show, and she has a wealth of experience investing, just as you shared. And you have this experience with corporate VC and all of the background you just laid out for us as well. Seems like you could have picked a lot of different directions for Haannah Grey. So how did you determine what it is that you guys are interested in supporting through Haannah Grey?
So Kate, like you mentioned, there's just nobody better than Kate. Like, you are not going to find a more thoughtful fund manager with just the experience and acumen that she has in terms of just the depth of companies that she's dealt with. And she's just a wonderful person to work with. So when we were working with Haannah Grey, we really think of our firm as the product of what did we learn working with hundreds of early stage founders over the past decade, and take those learnings across 5 venture funds to really think about what does an early stage selection lens look like for the coming decade. And what we really recognize at the pre-seed stage is you have to be the one to set the trends. It's very easy to be sector focused when you're Series A or Series B, like things are baked. But when you're at the pre-seed, particularly in this moment that we're in right now with COVID, it's really more about being a student and understanding how changes in human behavior and consumer behavior and worker behavior create outsized areas of opportunity. And so that's why we like to say we're generalist, but thesis driven, because we really believe that there's so many of these forcing functions happening right now, both from a societal shift standpoint and a cultural standpoint, down from just behavior changes of the ways that people are living and working, that we really believe are what is going to change and create big opportunities and big companies in the coming decade. Like we're just coming out of a moment of crisis. Out of moments of crisis really become chaos, and out of chaos really becomes new habits of behavior in terms of the way you do things, in terms of the products that you align with, the services you align with, the brands that you want to work with. Because when we're in these times of uncertainty, we just really understand that all bets are off in terms of brand loyalty. And these moments in time now are really about understanding what is going to be more convenient, what's going to be more values aligned, what's going to be more inclusive, what's going to be faster, what's going to be more accessible. And so given this period that we're in right now and all this creative creation, we like to say we're thesis driven because it's really around how do you expand availability for overlooked audiences? So much of technology that has been built historically is for the coasts. And so how do you really broaden access to things like education, like financial inclusion, like wellness, like healthcare? And so we're really interested in technology-enabled solutions that are just expanding access to goods, services, products, and opportunities that can improve quality of life. Information urgency is another theme that we're really focused on. There's so many industries that are still very disconnected in terms of how their data and how their services are displayed. So how can we use technology to better streamline that experience for the end customer? That's why we love these B2B2C businesses, because it's really, okay, what are the changes in consumer behavior and worker behavior that is driving adoption for this platform? That's why things like Zoom are so successful. That's why things like Slack are so successful. So it's, again, what are the changes in behavior at that end customer side that will create big businesses? And then the third theme that we're really focusing on is community-driven commerce. So that's not just, Kate, again, she's been at the ground floor of some of the most iconic brands of this past decade, with Warby Parker and Casper and Birchbox. She's first investor in Billy. I was early in Lively. And so we really understand what these early signals of success are. So it's really about how do you create a brand that is identity-driven, that creates a sense of belonging, that inspires you to participate in the community. And that's why, we really believe that education and community are the new acquisition. It's not about paid social. Oh, it's horrible. It masks true customer love. But then also another dimension of that is, as the influencer space has transitioned and morphed into the creator economy, what are new tools and infrastructure that are going to support them, as they're arguably the new small business. And I think that what we're also seeing of this migration into the creator economy is very interesting, because, the gig economy was sort of all the rage, but the gig economy was really focused on transferable, like non-skilled labor, right? Can you drive a car? Can you run an errand? Can you deliver a package? But the creator economy and this transition we're seeing from the influencer community, the influencer space, into the creator economy is more about how do you monetize yourself and your creations as a way to potentially cannibalize brands or become the new brands when you already have a built-in audience, you already have trust and authenticity with your base. So those are some of the themes that we're excited about, but it really transitions into sectors like commerce, fintech, future of work, wellness, education, marketplaces, and SaaS.
When you're thinking about these trends, how early do you want to hop on a trend? So like now we call it the creator economy or the passion economy because someone wrote a piece and dubbed it that. But 10 years ago, the inklings of this new habit were being formed and being started. So would it have been like, how do you think about, I see this trend coming down the road versus this trend is here and people recognize it as a trend. Now we can invest in it.
Yeah. So I think something like the creator economy, I Well, so I think two things about that. So number one, the creator economy is really fascinating to me because I lived through the evolution of the influencer rage. I must have talked to at least 60 or 70 different companies. And I think there's some clear breakouts, a couple of them that are good friends. Shout out to Aspire IQ. They're phenomenal. But it's also why I think it's interesting is where the influencer space started. It started as people with large followings that would look for brand partnerships that the brands would leverage them to create content for them, that would maybe do an affiliate program for them, or they would just syndicate some of the brand's content to reach their new audiences. And the transition that we're seeing now is these creators are like, I don't need you. I don't need to create content for your brand. Like, I actually have a brand myself. And so I think it's this really interesting shift in this mindset where I think COVID has absolutely been a forcing function for a lot of these people. And that's why we're really interested in infrastructure in this space, is because they're recognizing that they are able to cannibalize the brand loyalty and the trial for brands that they had previously been partnering with. I'm not saying that's not still going to be important, but now you're seeing the influencers start to have more tools available for them to monetize their day. I mean, we've seen some things where it's like, should I wear the red shirt or blue shirt? Like they're just monetizing every single piece of their day, which is also different from something like Etsy, which is arguably like almost one of these first springboards for that. Because now it's more about, is this an NFT that I can sell digitally? Is this, again, something like choose your own adventure with a day? Is this a cameo where it's like, I'll do something for you. I'll leave a comment. I'll do a birthday video, whatever it is. Like they're finding so much more creativity on how to monetize themselves and their lives as a talented individual, as opposed to, like I said, it's a difference from the gig economy where it was more about like, what is that transferable skill you have? So that's why I'd say like the evolution of that is really important. In terms of the piece you wrote, I'm assuming that you're talking about Lee from Atelier, who is freaking brilliant and phenomenal. And she was actually in an operator cohort with me last summer. She's a huge thought leader in the space. I have so much respect for what she's doing. I definitely feel like I've learned a ton from her, and it's crystallized a lot of my thinking in terms of just seeing this change that I had been following since 2011 with influencers. In terms of timing of, is this a trend? I think the big thing for me, and having lived through that, the VR, all the rage, is this solving a real problem? And is this something that is like manufactured hype and demand from some big thought leaders that are probably based on the coast? Is this solving a real problem for the customer? And this is why everything we do at Haannah Grey revolves around understanding what are the forcing functions, the cultural shifts, the societal shifts that are driving this trend to make it a lasting business. So something like the creator economy, really was born out of a lot of these people were laid off, or their business was on pause, or they had a partner that was laid off, or their spouse was laid off. And so it's emerging out of more this urgency based on these societal shifts that are happening, that we're just really excited about what that means for the coming decade, when you have this kind of intersection of what just happened with COVID around just this death of the old economy, coupled with new technology and infrastructure that's enabling this trend, coupled with just the creativity that's happening with millennials and Gen Z in terms of how they think about work and how they think about the type of job that will enable them to live their life and be who they want to be.
You said that Haannah Grey is a pre-seed fund, right?
Yes.
And so if you are investing in founders and you're trying to figure out what are the cultural things that are happening as forcing functions, that's one lens you have to look at to see, like, is there a real problem here? But that early on, the founders often don't have a whole lot to show yet either. So how do you guys think about that level of risk, or why did you decide to take that level of risk with this fund, given the pedigrees that you both have?
Yeah, so we love working with pre-seed founders. Like, we love understanding, how do they see the world? What problems do they need to solve? Why do they need to solve it? There's a lot of, I feel like, psychology that goes into understanding the DNA and having really your finger on the pulse at the early stage, is because it is often about, why do you want to solve this itch? And then help us understand why a lot of people need to solve this itch, and what is that market potential, and what experience do you have that is shaping your vision on the world? And what connections do you have that will enable you to succeed, whether that's around customers, whether that's around partnerships, whether that's around employees and talent. What is that view that you have that is unexpected and contrarian, but is something that other people are thinking and it's bubbling up under the surface. And so when you start to learn about people's childhoods from their past, how they live in their community, and that's really something that just really motivates us, is because our bread and butter is helping to turn those ideas into your first, call it 25, 30 employees and your first 3 to 5 million in revenue. Like, that is where we play. We are not the right fund to help you go from 10 million to 50 million in revenue. We are not the right fund to help you scale internationally. That's just not what we do. We're really about how do you start to build loyal, fanatic fan bases, your first 100, 1,000, 5,000 customers. And again, this is also taking a lot of the playbook of how we've made women in VC so successful, is because we really believe that you have to be building community to create that sense of belonging, to create that customer love that is really organic and that inspires that sense of belonging that your customers want to interact with you in various capacities. And so we love working with early stage founders because it's just, again, it doesn't matter whether it's HR professionals or whether it's soccer moms, like, it just doesn't matter. It's like, how do you build something that is solving a problem for them and then help us understand how big of a problem this is based on how many people you're targeting that are feeling the same way, that have the same pain point. And so that creativity is just something that, like, it energizes us. We're excited about it. It's the best job in the world because you get to just learn something new every day, because we believe, again, pre-seed investors have to set the trends. And it's really about just, it starts with the behavior of the worker and the behavior of the consumer to identify those opportunities. Because so often when we see founders that are just in love with their product or in love with their design, and it's like, okay, but why is this solving a need for the customer? Like, talk to me about your customer service. Talk to me about how you're building this for them. Talk to me about why you're obsessed with solving for that group of people and how it's going to improve how they work, how they live, things like that. So yeah, it's just like the most exciting place to be, especially now. Like, there's just so much creative creation coming out of this period. Like, these are moments that early stage investors wait for, looking at the silver lining, is because this is like a moment where there's so many disconnects in terms of what are the inefficiencies, what are the breakdowns in our system that have been exposed, that entrepreneurs are just like itching to solve and to do better. And so for us at Haannah Grey, like, it is a perfect time for us to be deploying capital, because we want to be solving those problems that when we come out of the chaos, when we come out of this period, we know that behaviors and habits are going to be recharted. And those are the companies that we're looking to capture.
Jessica, this has been awesome. If people want to find out more about you or Haannah Grey or women in VC, where should they go?
So if you want to share your business, we would love to hear from you. You can go on our website, haannahgrey.com, HANNAHGREY.com. We have a form, which is something that, again, we believe we want to hear from everyone. We don't care about warm introductions. We don't care where you're based. That is just not an elitist mentality that belongs at our firm. So anybody can go online and submit their business, and we will respond to every single one to see if it's a fit or if we want to continue the conversation. You can always find me on Twitter at Jessica Peltz, and Women in VC is at women-vc.com. We have some handy stats in there about our community. And if you are a woman investor, again, we require everybody to be full-time at a check-writing institution. So that's institutional funds, corporate funds, impact funds, accelerator funds, family offices that do direct, but we do have it all gated for membership to just keep the integrity of the community. But love what you guys are doing and excited to support and funnel more people your way.
Eric, the Upside Podcast Network is growing.
We're growing. We're adding new podcasts. We're looking at more, Jay.
We're looking at more. We have a strong bar now set by Lay of the Land and When Pigs Fly in Cleveland and Cincinnati, respectively. We would love to hear about your city, though, and consider launching a new podcast on the Upside Network where you're from.
One of the best parts about launching on the Upside Network is being surrounded by a group like When Pigs Fly and Lay of the Land to accelerate the development of your idea, to run ideas by, to learn about how to build a podcast. That's what we're doing here, Jay.
and we'd love for you to be a part of it. If you're interested in exploring starting a podcast in your local city, you can email us network@upside.fm and let us know. We'd love to hear about you and your idea for your city, and if it's a good fit, maybe, just maybe, you'll be on the Upside Network too.
All right, Jay, we just spoke with Jessica of now, finally, Haannah Grey. We got to do it.
We did it. It was as advertised. Holy moly, Jessica is an incredibly articulate and thoughtful person. Not that I didn't expect that. You just only get so much of somebody in email. And then here on the fly, I was just like, wow, she's got all these statistics up her sleeve. She knows all this stuff off the top of her head. It was a really impressive interview.
There is something about aggregation and directories that I just love. Easily searchable, aggregated directories. We built one with our friends over at Visible, which you can go check out at connect.visible.vc, which is aggregating investors across the United States and now the world. But when we were talking to Jessica off mic, she was able to pull up this directory and just say, oh yeah, I know someone here, and here's who I knew there, and here's how I know that. And I just love the power that comes with a well-curated, well-manicured directory.
Totally. And that directory is so impressive with 3,200 investors, 2,000 venture funds, 180 cities, 60 countries. That is a powerful, powerful directory. And now moving into Haannah Grey, what an incredible network to build and to be connected into as she's starting to source these very early stage, cutting edge companies with her partner, Kate.
And you know that a directory is not just a database. When we have been introduced through, I think, 3 or 4 different separate people to Jessica. So it's not just a directory. It's not just a database. It is very much a community that happens to have a data component to it, which is probably the ultimate form of what you want to build if you are building a community.
That's true. We mentioned in the intro that Jessica had introduced us to several people on the show, but also when we're asking other people on the show or in our inbox, who should we talk to? They're constantly saying, well, why haven't you had Jessica on the show yet? So she's definitely built a community around here. And I'm glad we got to spend a little bit of time talking about what that looks like for her as the community curator, because that size of a community who all operate in such a fast-paced world could become so overwhelming, I feel. So to see even the fact that she's essentially an extremely adept community manager, in a sense. I don't love the word manager in the world of community, but she's extremely adept at that. And that's not even what she's doing. That's just a byproduct of this passion project that she's doing on the side. So it really, really speaks to Jessica's ability to prioritize and delegate and make things real. And one of those things being Haannah Grey. I'm excited to see the types of companies that she and Kate are investing in. You know, she listed off some of the companies that Kate has invested in her pedigree with Billy and early stage consumer products like that. I'm sure whatever they find and start investing in, we're going to be saying, wow, those were good bets.
When we look at community, now it's 3,200. They have this directory. It's data driven. They have events all the time. We're looking at a cross section of the community that exists significantly later than when it was started. I think back to just getting it started and rolling that momentum with, I believe she said 12 people at a rooftop bar in New York. And I wonder how many of those meetings we're not having across the country, just because it's so hard to go from 0 to 1.
Yeah, that's a good question.
And I think about that specifically in context of what we're launching here at Upside. We have Pod Lay of the Land up in Cleveland. We have When Pigs Fly, and we're not doing events. So maybe I should be taking a little bit of a prodding. We should be taking a little bit of a prodding from that first meeting of 12 people. And I'm going to turn this selfish for a second here, Jay. We should be launching stuff like this in Cleveland and Cincinnati.
Yeah, we should. I have no excuse. I have nothing to add.
I finally silenced him, everyone.
Something that Jessica highlighted were a few trends that she's seeing that I wanted to call out to the audience here, because I think these are really on the money. Convenience. These are trends in like brands that people are interested in. Convenience, values aligned, fast, accessible, inclusive, community-driven commerce. These are definitely trends that we're seeing right now. And if you're out there thinking about the types of companies that you're meeting now and starting to find out about and starting to invest your time and attention and even dollars into, chances are they're probably convenient, values aligned, fast, accessible, and inclusive if those are things that you value.
And if you have any of those companies and you want to introduce them to us here on Upside, we're always looking for great pre-Series A companies that are building outside of the coasts. You can send us introductions without double opt-ins to hello@upside.fm, and we would love to add them to our pipeline.
Thanks for listening, and we'll talk to you next week. That's all for this week. Thanks for listening. We'd love to hear what you think about this episode, so tweet at us at UpsideFM or email us hello@upside.fm and let us know. You can learn more about us and browse our entire back catalog of episodes at upside.fm. And if you love our show, please leave a review on Apple Podcasts. That goes a long way in helping us bring high-quality guests to the show.
Rocky, I'm Sylvester. Super underrated, super underpaid. Today I'm gonna get it, and there's nothing in my way. It's about time.